Good afternoon. I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, today we got a special treat for you. Not like this ever happens, but the government made a big blunder on PSLF. Now, what is PSLF? It's a public service loan forgiveness program. Now, just that name, loan forgiveness, you know we're in trouble. But what it is, it's now 10 years is next year, starting in 2007. For student loans, you can pay 10% of your discretionary income for 10 years, and after that, you're done paying. Even if the loan's not done, you are done.
Yeah, I kind of want to clarify too real quick what discretionary income is.
I'm glad you brought that up. Discretionary income it includes your taxes, food, travel, savings. It's not a very high number when you look at discretionary income.
Yeah, and we always talk about maybe saving 10% for retirement. I always talk about 10% pre-tax. Right. So 10% after taxes and after all the other stuff that's not discretionary, it's not that big.
And what that does, it brings down the amount of income. Your discretionary income is lower, so therefore your payments are lower.
Exactly, and kind of looking at who is applicable for this program. Again, it's public service, so this includes government jobs, nonprofit, now this is non-religious nonprofit jobs, and family service. This is about a quarter of the workforce can apply for this public service loan forgiveness program, which is pretty astonishing, a big burden for our government.
Right.
And what this means is, think about this.
This is even crazier.
If you took out $30,000 for student loans or $100,000, it's the same amount of payments because it's based on your discretionary income for a set amount of time. So what that does is it incentivizes you to go borrow away a lot of money if you know you're going to public service and say, well, I don't have to pay for it.
Right. And why is the government in so much debt?
And why is the cost of college risen so much? Free money.
Exactly. Well, let's move on to something more positive. We'll talk about Polaris Industries. Current price around 74, the high 124.39, the low 67.80. Actually, back here is above 150. Looks like looking pretty good here. I think maybe we have a buy here because I like to see when companies are cut in half. Let's check the numbers before we get too excited. Well, this company does off-road vehicles, snowmobiles, motorcycles. A very exciting company. We've lived with this company for a long time. However, sales down 1.3%. Earnings per share not looking very good, down 15.5. So give me some good news here.
Well, I do love these vehicles, so they're a lot of fun to drive on the back roads and stuff. But also pretty excited about their balance sheet. Current ratio 1.21. Debt to equity, 50.65%, so that's a comfortable amount of debt on the balance sheet. Now here is not a problem, but it's not great news. December 2017, estimated earnings per share on a GAAP basis, $5.41. Here's a target sell price of $89.27. So it is very close to buy. I would definitely keep this on a watch list to maybe look at this and understand it deeper.
And one thing I was going to say too is that in a couple months we'll have 2018 earnings come out. Going to have some volatility. So this, again, you're right, put on the watch list because I think it's a pretty good company.
Yeah, you want to make sure their earnings per share doesn't continue to decline as well, because if that is the case, then that could be very problematic going forward.
Check those numbers as always. So, all right, well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like to find out more about our upcoming Smart Investing Workshop Breakfast on Saturday, October 22nd.
It's coming up quick. Can't believe it. Hope you guys can make it, though. You can give us a call at our office, 858-546-4306, or you can go to our website, smartinvesting2000.com to